2008, if you look at the underlying, basically the banks created fake money. They created these fake, not fake mortgages, but mortgages that were hardly backed. And that propped up the property prices until the bubble popped. Look at the previous crypto cycle, the Lunar cycle, 2021. It was all fueled by a synthetic dollar, which was created, an algorithmic dollar, which was created. I actually think we're about to go into a very, very, very bullish stage in the bull market.
You're making a bold prediction. $250,000. Is that your prediction? Ron Neuner, host of Crypto Banter, the very popular crypto platform online, is back with us to give us his outlook for the crypto markets, alts and Bitcoin alike. Talk to us about recent legislation and how that may impact the markets. And interesting news coming out of the treasury side. Welcome to the show. Ron, welcome back. Good to see you.
David, good to see you, my friend. Been quite a while since we've done this.
Last time we spoke, it was a bull market. This time it's another bull market. I don't think I've seen this kind of a rally since 2021. This is the Bitcoin screen. We're at 116,000 now. It was just touching 120,000 just a couple of days ago. It's pretty crazy. And what's even crazier to me is the alts are finally starting to catch up. So if we go to Bitcoin dominance here, you can start to see that it's been falling. Come on, BTC.D. There we go. You see, plummeted like a rock from 66% to 61%. All right, so what's happening right now? Just give us a macro overview of the crypto markets before we get into some of the details. Are we seeing a rotation from the Bitcoin side into everything else? And is that going to sustain?
So I think let's just quickly look at where we are in the Bitcoin cycle. I'll actually show you something quite interesting when you look at the Bitcoin cycle, if you'll just allow me to share my screen. So
go ahead.
I'm going to share my screen. That is the Bitcoin chart. And if you look at the chart over here, what you realize is this is effectively the chart of the crypto bull market, right? Now, if you look at how this crypto bull market usually plays out, you can see that you get a lot of consolidation, and then you get a climb, and then you get a lot of consolidation, and then you get a climb, and then you get a lot of consolidation, and then you get a climb, and you get a lot of consolidation, and then you get a climb. The interesting thing here is that every time we get a climb, it's about a 50% climb, right? So I'll show you this. So we went over here. Once we broke out of this rally over here, we went up here and we hit, that was 50% higher, as you can see over there.
Yeah.
Then we consolidated in this level for quite a while. And if you take this level and you say, okay, well, how do we rally from the time we actually broke out, which you could say this is the area of the breakout. Well, we were up like 60% over here. Then again, we consolidated. We broke out of the consolidation range here, and we broke up here, and that's about a 60% climb to the top. And then we consolidated again over here, and from the period we consolidated and we climbed over here, we consolidated about 50% or 40%. So what we're getting is we get this sideways accumulation, and then we get these massive breakouts from Bitcoin, which land up being around 50%. That's the average. The average is around 50%. Now, this time we had the consolidation and we broke out of the consolidation, and we so far have only climbed about 11% from the breakout to the top, which means either the momentum slowing down or we were in the midst of quite a big move. So as you can see with all these other moves, you have a little bit of a leg up, you have a little bit of a consolidation, and you carry on moving. You kind of had a similar pattern over here. You broke out of here, you had a little bit of a consolidation over here, and you carried on moving. And I mean, again, the pattern is quite clear here. You went up, you had a little bit of a consolidation, and you carried on moving. So if I were to bet, I would say that we're in this 4-year cycle. We're at the end of the 4-year cycle. We're nearing the most aggressive part of the 4-year cycle. This is when most of the returns are made. It's akin to the 2021 4-year cycle, or the 2021 post-election year. You can see what happened in July, which is, it's quite like we're in July of the post-election year. And we peaked, and then we dipped, and then as you can see over here, we're now going into the second part of the rally, which actually puts in a higher high. So if history were to repeat itself, I'd imagine that this chart continues to go up. If I had to put my name to a number, I think probably next stop is around $150,000 on Bitcoin. And as you rightly pointed out, when you look at the Bitcoin dominance chart, this is also usually the part of the cycle where the dominance usually falls off a cliff. So I'm going to quickly just take us to the weekly because it just feels like a better chart to look at. We're looking at the 2017, again, post-election year. The dominance falls off a cliff and people rotate into altcoins. 2021, same thing happens. Dominance falls off a cliff and people rotate into altcoins. And I guess you can kind of say that maybe now the dominance needs to fall off a cliff. We had a trend line which was broken over here. I mean, I'll draw a very loose trend line for here just because, here we go. Trend line looks something like that. The dominance broke below the trend line. And there's another chart which, if you want to look at, is probably worth looking at it, and that's the ETH BTC chart, which shows you ETH, the biggest altcoin, against Bitcoin. What you can see is that this chart has been in a downward trend for a long time. And what you can see is that you're finally getting some chance, some semblance of recovery in the ETH BTC chart. So all in all, it's looking extremely bullish. Like the setup seems bullish. ETH is getting strong. Dominance is dropping. Bitcoin is halfway through another move. And timing-wise, what we know when we talk about timing-wise, and I'll actually have a look here if I can see if I can find a chart here for you. So I've got a chart here which I'm going to try and pull up for us, which actually shows us the 4-year cycle. And what that chart is going to show us is it's going to show us that okay. So here are the Bitcoin moves that we actually spoke about. Remember, I said to you that like they all 50%. So you can kind of see the chart a bit better there. I want to see if I can find. Here's the one of the. I think it's this one here with the 4-year cycles. There we go. So you can actually see when you look at the Bitcoin chart and you look at the 4-year cycles. Generally, we peak in 2017. We peaked in December of the post-election year. In 2021, we peaked in November of the post-election year. And if the cycle is to perpetuate itself and we're going to carry on in the same kind of cycle, then we could probably assume that in the next 3 to 4 months, the cycle actually tops. And I mean, yeah, so that's pretty much where I think we are right now in the cycle. And that's pretty much kind of like the lay of the land.
Let me just pull this out here. I'm not sure if this is you, actually. You were quoted by Yahoo Finance. It says Ron Neer. Is Ron Neer you?
They often get it wrong. They often get my name wrong, yeah.
Anyway, you are apparently the man who called every single crypto cycle since 2017. You just revealed the blueprint for the...
I don't think that's me, but I mean, I'll take the compliment.
For the 250K Bitcoin run, that's your target. It says you're after building a...
Yeah, that's me. Yeah, I mean, that is me.
Ron Neer. You've built Crypto Banter. Yeah, all right. The most profitable community in the world now with Bitcoin trading at all-time highs. Neuner, I guess, you suppose that they spelled it wrong. You're making a bold prediction. $250,000. Is that your prediction?
So I think, I am pretty confident that by the end of the cycle we'll be at $250. That's really where I'm positioning myself. I think that if you look at how aggressive the last 3 months of the cycle usually are, and again, I'm going to call up the charts again just so that you can see, I'm not basing this on a thumbsuck. I'm actually basing this on historical data. So look at how aggressive the last 3 months of the bull market generally are. And look at how aggressive the last 3 months of the bull market were actually up here. That's when the cycle goes parabolic. And so I wouldn't be surprised if we actually hit 150,000 pretty soon. Let's say pretty soon, August, September. And then I think for the end of the cycle, 250,000. That's pretty much where I think we're going to land up.
Before we continue with the video, let me tell you about a very important topic. Bitcoin. It's had a 10-year compounding annual growth rate of over 80%, and it's been one of the best performing assets in the world. That means there's a high opportunity cost to spending your Bitcoin savings. Now, with today's sponsor, People's Reserve, and their revolutionary Bitcoin-powered financial products, you can now borrow against your Bitcoin with no credit checks, no income verification, no taxable event, and no rehypothecation risk. Their flagship product, the Bitcoin-powered mortgage, is redefining home ownership for Bitcoiners. And here's the best part. Liquidation risk isn't tied to price volatility, only to non-payment defaults. This protects borrowers and lenders from the biggest risks in traditional crypto lending. With the advent of People's Reserve's revolutionary lending products, you can now unlock the purchasing power of your Bitcoin savings without having to give up ownership. Go to peoplesreserve.com, link down below, or scan the QR code here. Sign up for their newsletter and discover how to build wealth smarter. That's peoplesreserve.com.
And then timing-wise, you're looking at what, 2027? That's what you said?
No, end of 2025. So I think the end of the cycle comes. I mean, again, if history were to repeat itself, the cycle generally tops. The cycle generally tops at the end of the post-election year. Now, I would love to see a longer cycle. As a crypto investor, I'd love to see the cycle go a bit longer. And there is a good chance that the cycle will go a bit longer. And the reason why there is a good chance is because we haven't started rate cuts yet. So now the question is, when will we get rate cuts and why will we get rate cuts? If we get a gradual easing of rate cuts, which would fall into this soft landing narrative, then I think the market rips, and then we could maybe continue the run into 2026. But we could get a COVID type scenario. Like, the last two times that rates came down aggressively was 2008, where rates came down aggressively because of the housing market collapse. And then 2020 or 2020 when around COVID time, and that was because of a pandemic, right? So, I hope that rates don't come down because of one of those kind of things. And as long as rates come down pretty gradually, then I think we're in for a home run.
We're not going to, this side topic, we're not going to get 3% rate cut as Trump asked Powell very politely to enforce, are we? No.
So we just finished the FOMC meeting, and I think Powell was grilled about this. Powell's pretty steadfast. He ain't budging to the Trump pressure. He's working on the data, and I think he kind of hinted that the first rate cut was going to be in September, and the market's pricing in one rate cut in September and then another rate cut in December. And that's what the market's starting to price in. And I think when they're pricing in a rate cut, they're pricing in a 0.25 or 25 bips rate cut. So I think our best case scenario is we're getting a 50 bips rate cut this year. I think that's the best it can be.
You've explained that synthetic leverage is potentially a risk to crypto investors and may potentially be a headwind for this bull run. Walk us through what synthetic leverage is and why we should be concerned.
Okay, well, let's talk about what actually generally crashes crypto markets, right? So what usually crashes crypto markets is leverage, right? So the first, and I think it's really what happens with every market. If you think about like the property market in 2008, what crashed that property market? Leverage, right? Excess leverage. Now, what do we define leverage as? Leverage is defined as money that doesn't exist in a system being used to prop up asset prices. That's basically leverage, right? And so like 2008, if you look at the underlying, basically the banks created fake money. They created these fake, not fake mortgages, but mortgages that were hardly backed. And that propped up the property prices until the bubble popped. Look at the previous crypto cycle, the Lunar cycle, 2021. It was all fueled by a synthetic dollar, which was created, an algorithmic dollar, which was created. There was billions and billions of dollars of this dollar. And when the pin popped the bubble, the leverage cascaded and the whole market collapsed. So what I ascertain is that most market crashes, most market collapses are caused by leverage collapses. And I think this cycle is going to be no different. And the reason why I think the cycle is going to be no different is we have a different type of leverage in the market this cycle. Let me explain it to you very simply. Michael Saylor, who's a genius, by the way, created a vehicle called, he had a company called MicroStrategy. And what he created was he created a way for crypto assets to attract Wall Street money. And by Wall Street money, I mean two pockets of Wall Street money, equity and debt. So by doing that, he took a very small crypto market, which is a $4 trillion crypto market, and he opened it up to $80 trillion of assets, right? Debt and equity assets are estimated at $80 trillion. And what he did was he created a very smart, through very, very, very smart financial engineering, he also created a playbook of how to expose fixed income investors to Bitcoin returns. And he did that with a fixed income instrument, which is a convertible note, which converted into equity. And the equity obviously appreciated if the Bitcoin price went up. So genius financial engineering, genius leverage. Michael Saylor created a playbook, which is great. That playbook allowed him to grow his share price faster than pretty much any share in the NASDAQ. It created a lot of shareholder value. And I think it was very genius. Okay, fast forward a little bit later. He shares the playbook with the market. He's pretty open about the playbook. And we get a whole lot of new treasury companies launching. MetaPlanet, which is a Japanese one, and a whole lot of other Bitcoin treasury companies that have launched. Now, the one thing about these treasury companies is they trade at a premium to the net asset value of the crypto that they hold. Why? Because they're tapping debt markets or fixed income markets. So equity holders only have to repay the debtors, and then it's like any company. You get a higher return on shareholders when you can return a rate higher than you're paying your debt holders. It's like any company in the world. Okay, so let's fast forward a little bit, right? A couple of weeks ago, we got an announcement from the co-founder of Ethereum. His name is Joseph Lubin. and he made an announcement that he took over a vehicle called SharpLink, and he was converting SharpLink into I'm going to show it to you right here. He was converting SharpLink into an ETH treasury company. And he was raising $425 million from some of the most prominent funds in crypto to do the same thing on ETH. A week later, Tommy Lee, who I think we all know is a very well-known investor from Fundstrat.
Wait, this is May 27th. Okay. Yeah, please go ahead.
So that's May 27th. About a week or two later, Tommy Lee launches. So I just want to show you the chart of SBET and what happened to the chart of SBET. As Joseph Lubin announces this, the shares of SBET absolutely explode. In fact, they go from just under $2.91 and they go up 4,000% in 2 days. A few days later, Tommy Lee launches his company, which is called Bitmine. And on that announcement, he's also launching an ETH treasury vehicle. On that announcement, the share goes from $4.40 all the way up to $158. And again, in 1 or 2 days. Obviously, those shares have come down since. So what happens? Well, the psyche now in Wall Street is if you touch and buy anything related to crypto, then you will make money because those shares go up 100x, just like crypto assets go up. Okay. So we are feeding a frenzy. This hype in Wall Street is feeding a frenzy. And the frenzy is using equity and debt money off Wall Street to fund companies which land up buying crypto assets. And because they're using equity and debt, effectively these companies are leveraged. And so now what you're getting is you're getting consumers or investors investing in companies that are buying assets on leverage and are trading at a premium to net asset value. Okay, now, what does this mean? It means that effectively the difference between net asset value and the premium that people are getting paid is the leverage. And as that continues to grow, I mean, I'll try and find you an ETH tracker. I think I don't have an ETH tracker here, but all of these companies are trading at a massive premium to net asset value, sometimes 2 or 3 times the net asset value of the crypto that they hold. Okay? Yeah. And effectively, that's creating a massive, massive leverage bubble. So now, how does this end? Well, leverage bubbles have 2 sides. The first part is the fun part, and that's when everything goes up and goes up aggressively and goes up fast. And if you can ride the roller coaster and you can get out of the casino very, very quickly, great. But if you can't and that leverage bubble pops, this is what's going to happen. The share prices of these companies are going to collapse. They're going to start trading at under net asset value. When they start trading at under net asset value, they're going to not have a reason to exist, and then they're going to start shutting down. When they start shutting down, they're going to start selling off their crypto assets to pay back the debtors, right? Or to pay back the creditors. And that's when we're going to see a mass leverage unwind. We're going to see all the dominoes falling in a mass leverage unwind. So I predict that the leverage that is going to end this crypto cycle is leverage created by these treasury companies, which are accessing equity and debt capital from Wall Street to buy crypto assets with leverage.
But the market would only move if these treasury companies offload the underlying crypto. And if they don't, if they just hold it, even if their shares are trading at under NAV and people dump their shares, it still wouldn't move the underlying crypto market, right?
Well, there's 2 things that are going to make them have to sell. The first thing is these companies will become unprofitable. They'll start selling at a massive discount to net asset value. And then the truth is, what is the reason for them to exist? I mean, like in crypto, there's the meme, diamond hands, diamond hands. It's only diamond hands until it's not diamond hands anymore. And I've seen this before. And then they start selling. The second thing is that eventually the debt becomes recallable, right? And you need to be able to refinance it. Now, you can't refinance the debt anymore because there's no appetite for that kind of debt. Then what happens? You have to pay back a debt. You have to get the money from somewhere, and you start liquidating it under net asset value. So it can't end well. It's a great cycle to be a part of as long as you know that you need to leave the casino really early. You need to be home by 10 p.m. Because if you stay till 12 p.m. or 12 a.m., you'll probably land up being a pumpkin. You know what I mean? Like it's as simple as that.
Why can't a company like MicroStrategy just issue more convertible bonds or perhaps just issue more debt outright to buy additional Bitcoin if the net asset value falls below the underlying Bitcoin value?
You need demand, right? And if when crypto prices start to go down, because all of a sudden you make an assumption that crypto prices are going to go up forever, and that's not a good assumption. We know that
Yeah.
at the end of the cycle, we have massive, massive, massive corrections, right? We know this. It's par for the course in crypto. They go down, prices go down 80 to 90%. Now, maybe they won't be as aggressive this time. At that point in time, what's going to be the demand for what's going to be the debt market's demand for crypto assets or exposure to crypto assets? Probably nothing, right?
I actually heard him explain this at a conference, but I'll have to find a clip another time. Let's just jump to this chart here. This is, well, not a chart, but this is a table showing the largest public Bitcoin treasury companies. As you can see, strategy number 1, Mara Holdings.
Marathon, the miner, number 2. That's Marathon.
Yeah.
That's Marathon. It's one of the biggest mining companies.
Yeah, I didn't really consider them a treasury company, but I guess they have a treasury, so I guess that qualifies. But anyway, these treasury companies are buying more on a cumulative basis. They're buying more than the 400 or so Bitcoin mined per day. And so the question is, what's going to happen to the overall supply?
So I think the supply shock on Bitcoin has been here for a long time. Like, for a long time, there've been incremental buys much more than what the Bitcoin algorithm is emitting. And as a result of that, we've got crypto prices going up. And that's why we've been in such a rampant bull market, right? I don't think that that's going to stop. What worries me more is the altcoins, because with the altcoins, they don't have such a predictable supply. They a lot of them are not as programmed by algorithms as the Bitcoin supply is, and I think that worries me a little bit more. And again, I'm not raising the alarm bells that the market's about to crash now. Don't get me wrong. I actually think we're about to go into a very, very, very bullish stage in the bull market, right? But
could one make the argument that if these treasury companies continue to buy at a faster rate than Bitcoin is mined, then we will not get, it is mathematically not possible to get any sort of major downfall from this point on?
Well, yes, but don't forget there's a whole lot of old sellers that are holding on to Bitcoin that they've had, like, there's a whole cohort of people holding on to Bitcoin that they bought at under $1,000. And that supply will definitely hit the market. I mean, we saw just last week that there was a wallet or a set of wallets sold by Galaxy Digital. 80,000 Bitcoin was sold into the market in a couple of days. Now, those Bitcoin, if I'm not mistaken, had been dormant for either 11 or 14 years. They were bought under $1,000. And whoever's selling them is selling them now at $115,000, $120,000.
Okay, you mentioned ETH. Let's talk about ETH now. Flip over to this chart here. ETH is now trading at above $3,700. It's crossed the so-called golden cross, the moving averages, short-term and long-term moving averages merging, and it's now trading above both. I believe this is 9 and 21-week moving averages on this chart. Anyway, I'll let you evaluate ETH. I was just wondering whether or not, this is May 9th, May 8th. The Lubin announcement was made May 27th. I'm not sure if that had any impact on the ETH price.
I think you can see that they front ran the announcement, right? I think you can kind of see that people front ran the announcement. I think it's pretty clear that the announcement pretty much got front run by the ETH community. No surprise. I mean, yeah. I think the more interesting chart is if you go look at the ETH BTC chart, that's also had the golden cross. So if you look at ETH BTC also had a golden cross. So all in all, if you're looking at charts, it's super, super, super bullish. Like, it's super, super, super bullish.
Yeah.
I think you just have to do ETH BTC. Just do ETH BTC and it'll give it to you.
Yeah, there we go. Okay. Okay, so is this is a sell indicator for Ethereum, or is this?
No, I think this is great. I think this is I think if you look at the ETH BTC chart, I mean, it's just showing you that there's so much strength for Bitcoin for ETH against Bitcoin. This is probably this is the last part of the bull market. This is where the altcoins and ETH and related coins actually land up outperforming.
Mm-hmm. Okay.
Bullish structure.
Well, you actually have a. Excuse me, I'm a little bit sick. You actually have a trading bot now out for both ETH and Bitcoin. Just high level, walk us through how it works. And
I'll tell you what I've done recently is I know that I wrecked myself. Well, I wrecked myself. I landed up making money, but I didn't land up making as much money as I should have in the last part of the crypto bull cycle in the last bull markets, right? And the reason why I did that is because I let my emotions get the better of me. And I think there are a lot of people in investing that get caught up in emotions. And look, I would say by now I'm quite an astute investor. I've seen everything. And even now I get caught up in emotions, even though it's a lot less. And so what I decided to do in this cycle was actually to eliminate human emotion for some of my capital for the last part of the cycle. And by eliminating human emotion, what I did was I tasked a set of bots and AI agents to actually trade for me. And the reason is because I just think that rules-based trading is much, computer-based, algorithmic-based trading is obviously much better than human-based trading. And I must say, like, it's been about a month that I've been running a lot of these bots, and the results have been absolutely mind-blowing, to be honest, and absolutely mind-blowing. I'm going to just quickly try and find you a couple of the bots, just so that you can see more or less where we're. Let me just quickly access some bots for you so you can see them. Give me a second. Try and find you. Trying to find you a link where you can actually see all the bots. I think it's this one. Okay, so the first bot that I created was a bot which I called Nayib Bukele, and the reason why I called him Nayib Bukele was because he has a job, and his only job is actually to accumulate more Bitcoin. So
are you sharing your screen right now? Yeah.
I'm gonna just call the bot up, and then I'll share my screen with you. Okay, so right. I've launched a couple of bots, and they've been absolutely mind-blowing. So this is the Nayib Bukele bot. Ironically, for this one, they limited to 200 people on the exchanges, and the reason why they're limited to 200 people on the exchanges is because they don't want the bot to move the exchange market, right? And so here we put him in about a month ago. You can see that we put him in on the 1st of July. So you can see in July he's done 25.77%. He's had a 76% win rate and a max drawdown of 6.97%, which is, I think, phenomenal performance on a bot. Then, because of the success of this bot, we decided to launch one on ETH because we knew that the ETH part of the cycle was going to be way more aggressive. And so we created another bot. We called it the Joseph Lubin bot, after Joseph Lubin. And we put him up about 6 days ago. And so far, he's got a 100% win rate with a 10.09% in the last 7 days. And the maximum drawdown was 1.68%. So, I think, this is one set of bots that we're running. These are more directional bots. And I want to say directional bots. These bots are betting on the market either going up or down through quant models, and they're trading up or down on quant models. Now, we allow people to copy them. So in other words, you can either choose to run the bot yourself, or you can just press one button and you can just copy the bot. It's up to you. So this one's done that. So that is what I call a directional bot. It's a bot that is trading either long or short. And if you look at the trades here, you can actually kind of see that most of the trades here are buy. And if you go to the Nayib Bukele bot, the trades here are pretty much, let me just go back, show you some more trades here. So you can see that the trades are like buy. Because now the market's going up, and these bots are directional bots. Phenomenal returns. As I say, you can see the data over here. The Nayib Bukele bot had a 25% return this month, and the Joseph Lubin bot, which has only been going for a week, is at a 10% trade. But we also have been experimenting with grid bots. Now, what a grid bot is not a directional bot. It's a bot that trades in a range, because what you'll realize is that markets most of the time actually land up trading in a range, right? And there's a couple of days where we actually land up breaking up, but generally markets trade in a range. And so we also created some grid bots to just trade the ranges. And what you can see is that these grid bots actually have, like, this one had a 40, like, these are just some of the results. Like, these bots are pretty new, like 23, 26 days, like 56% return on ETH, 28% return on Sol, 42% on XRP. What these bots are doing is they're trading in and out based on grids. So I'll actually, if you give me a second, I'll actually log in. Yeah, let me actually log in. I'll actually show you how a grid actually works. I'll just show you. I'm just showing you one of the bots here.
While you're pulling that up, how frequently does, let's say, the grid bot trade?
Okay, so GridBot trades in and out all the time. So I'll just give you an example. I'm going to quickly just show you how easy it is for me to set up one of these GridBots. So let's say that the bottom of the range, I want to make 100,000 on Bitcoin. And the top of the range, I want to make 150,000 on Bitcoin. That's the range where the bot will trade. And let's say I set the number of grids here at 300 grids. I think it's a bit too low. Let's just see 400 grids, 250 grids. Okay, let's say we do 250 grids. That is the grids. You can see those lines over here, the little green and the red lines. Now, the green is where the bot will land up buying, and the reds are where the bot will actually land up selling. Now, obviously, that changes dynamically as the price of Bitcoin lands up doing it, and it trades in and out and in and out and in and out on very small increments. The advantage of that is that you don't have big losses, so to speak, because the bot is trading in and out and in and out and in and out, which is quite powerful. I'll also show you something else if I can. I just want to see if I can just go. Got it. Let me just close all of that. Let me see if I can actually get you to a futures bot here. We can actually look at one of the futures bots. So let me see if I can actually. Okay, so what you can see here is that even though sometimes the bot, I just opened this bot earlier on today, and you can see that the actual bot is down on the Bitcoin price because it's holding a little bit of Bitcoin. It's actually making money on the grids because it's trading in and out, in and out. So it keeps it in two separate pockets. So as I say, I've been experimenting for the last couple of months with two strategies, or one is a directional strategy. Had amazing success in directional strategies. And now we're having a lot of success with the grid strategies. And again, to me, I just trust bots more than I trust myself. That's the reality of it. And I know it's probably not the right thing to say, or not what most people want to admit, but bots are much smarter than humans are when it comes to trading. Investing is maybe another story. I'll be honest. Like when it comes to investing and you got to make an investment decision, I don't know if I would trust a bot. But when it comes to trading, I think that's where you got to trust an algo over a human.
What does an algo do better than a human? I mean, humans program the parameters that the algo trades on, right? So fundamentally, what's the difference?
Pretty simple. A bot doesn't have emotion. It doesn't move the stop loss. It doesn't get emotionally connected. And that's the problem. The problem is that you set a trade. You say to yourself, I'm going to buy Bitcoin when the price gets low. Problem is when the price gets low, you get too scared. And you keep thinking it's going to go lower and lower and lower. A bot doesn't do that. A bot has a trigger point. Whatever the trigger point is, when it triggers, it buys. And then it sells when the next trigger point happens. Now, as a human, I know this, you know this. You buy, and then you buy at the wrong time. You sell at the wrong time. You deploy capital at the wrong time because you rely on your emotions. And I mean, I think for me, bots are just a very, very, very good way to remove emotions from trading.
Are you putting your own money into this bot?
Oh yeah, tons. I mean, a lot of my money is in this bot. A significant part, about 2/3 of my trading portfolio are in the bots at the moment. I mean, you can see I'm going to just share just in each one of these strategies, and I've got tens of these running. I've put $50,000 of my own money in each one of these, and I'm literally running 10 of these strategies at the same time. So I'm significantly invested in these bots. Again, I'm not going to put anyone into bots that I'm not invested in myself. I think that would be crazy.
Yeah, I think the next evolution would probably be the marriage between AI and bots. AI using large language models could do the research behind what actually makes successful trades. The bots execute. Tell us about your views on that. Yeah.
I'll actually tell you something. The creator of these bots is AI. So it's not humans that are creating the bots. It's AI that's creating the bots. AI is coding the bots.
So let me just guess what you've done here. You've just prompted AI to create bots based on, I don't know, what's worked before for you or other people that you know?
So you prompt AI to find, so let me just, one of my news terminals is going off like crazy here. So you prompt AI to look for patterns, and when it finds the patterns, you tell it to code an indicator to show you what those patterns are, and then you transform the indicator into a bot, or the AI transform the indicator into a trading bot.
Very clever.
Yeah, so simplistically, because the problem is that you and I we don't have enough computing power to go and find all the trends, right? We can't review 10,000 charts and find the trends. But AI can do that. It'll take it a couple of seconds. And then it finds the trends.
How is this going to fundamentally change the investment management industry?
Well, as I say, I think all trading will be done by bots. And there's really no human intervention needed there. In fact, if anything, humans are disruptive to that process because we ruin a mathematical process of a mathematical pattern process with human emotion. That's what we do. So I think all trading needs to be done by bots. And I think like Wall Street's been moving that way for a long time. They used to call them quant models. What is a quant model? It's effectively the same program that you feed a bot. And you just tell the bot to act on your behalf, right? So Wall Street's been doing it for a while. I think the difference now is that instead of smart actuaries and they used to call it my quant actually designing the models, you can just tell a very basic AI to design the model, and it will do that.
Finally, let's end on altcoins, meme coins, to be exact here. You've been tweeting about some meme coins. Well, you always do, but here, just let me pull up a recent one. All right, SQD, I believe it's Subsquid.
So actually, SQD is not a meme coin. Actually, SQD is a very, very sophisticated protocol. And effectively what it does is it indexes smart contract data. And the reason why you need to index, so this is definitely not a meme coin. It's a very successful protocol, which is very, very highly used or going to be very highly used in AI. Because AI needs to access smart contract data and it needs index smart contract data, and SQD actually covers that.
But it trades like a meme coin, or no? I mean, how would you differentiate it?
No. It's a very good strategy. That's a very, very, very strong token. That's a very strong token. It's a project that's run by a very, very strong team. They have a lot of backing from a lot of people. It competes with another project in crypto called The Graph, which is a $1 billion market cap. I think SQD is about a $250 million market cap.
That raises my next more fundamental question: is how you differentiate between an alt or a project, right? Like SQD. Subsquid versus a meme coin like Pepe. I don't know. I'm just making some stuff up.
Yeah. So look, if you're in the trenches
or in crypto, a utility, yeah.
So you know what tokens are being issued by protocols and what tokens are just being issued just as around a picture or a movement or a culture or whatever you want to call it, right? Like you kind of know that. Like Pepe is just a frog and there's no uses for it and there never will be uses for it. Fundamentally, there's no value in meme coins. There never will be value in meme coins. I think that I love the meme coin casino because I guess it's fun, and that's where if you feel like going to have some fun, buy yourself some meme coins. They go up, they go down, they go up like crazy, they go down like crazy, and you kind of know what you're getting. You don't have to do you don't have to think because there's nothing to think about. It's either a nice picture or it's not a nice picture. When it comes to protocols like Subsquid and a whole lot of others, you actually have to do a lot of research to understand the utility of the token, whether it's actually ever going to get a use case, where it's actually ever going to get used. So I think, look, we know this because we do this every single day. I don't recommend to anyone to actually just jump into the thing. Funny enough, like, because a lot of people actually are very similar to you, Dave, I actually created, and everyone was asking me to create portfolios. I actually partnered up with a company called Botsfolio, and all I did was, and again, it's free. It's a free subscription. If you follow my shows, there's a link in my shows, and it gives you a free subscription to this. I'm really not expecting anyone to pay for the service. So please don't. If you're watching this, just go to my YouTube shows and look for the Botsfolio link, and you'll get it it's for free. Actually, Dave, I'll actually send you the link, and you can actually see it. But what I've done is I've actually created model portfolios, which is like portfolios that are designed to capture the returns of this market. So you can see I've created like an ETH bull a portfolio, which is up 44%. Let me just quickly expand that. I've created a whole lot of portfolios, AI portfolios, meme coin portfolios, a mix between AI and meme coin portfolios, a Coinbase top 50 portfolio. So I've created a whole lot of different portfolios for people to actually follow. Now, the performances have been like fantastic. As you can see, these portfolios were created about a month and a half ago. Majority of them are like up and up a lot. So the ETH portfolios are up 40%. The top 20s are up 20, 30%. Few of them are down. Like the meme coins ones are slightly down because the meme coin run hasn't yet started. The AI ones slightly down. But if you do want to, if your audience do want to just get an idea of portfolios, you can actually just log on to this platform and you can pretty much see everything that I'm doing with my portfolios.
How would you evaluate the overall performance of the meme coin market over the last 6 weeks, and whether or not that's an indicator for a cycle top?
Some meme coins have done really well. The big meme coins have done really well. And then when you go down into the trenches, it just becomes a minefield. Some get 100x returns and some die on the same day. So it's, I mean, in general, yeah, memes have done pretty well. Actually, we have another program here, which is called Banter Bubbles. I'll just see what the Banter Bubbles give us here. So we have a Bubbles program. It displays, here we go, I'll show it to you. What it does is it displays all the tokens. And if you look at the last month, you can see like the big performers in the last month. Pengu is a meme coin. Floki is a meme coin. Bonk is a meme coin and a meme coin engine. And if you go into the next 200, like all the big ones here, there's a lot of meme coins that are actually mixed up here. So, I mean, in general, I think the performance of the meme coins has been pretty good. I think it's been pretty good. It's the beginning. Like there's a long way to go because what they're going to perform really well when the market gets into bull market territory.
Okay, excellent. Good talk. That was sensational. You're making me cry. No, I was kidding. I was just coughing. Ron, good to see you. Good to chat as always. Where can we find you and your work?
Okay, so I guess the best place is to go onto the YouTube channel, the Crypto Banter YouTube channel, which I think you'll put a link below. Otherwise, I'm on Twitter at CryptoManRan. And that's pretty much where you'll find me.
Okay. Thanks very much, Ran. We'll speak next time. Take care for now.
Good to see you, Dave.
Yeah, thank you for watching. Don't forget to like and subscribe.